Hemang Jani, good morning.
Good morning, Nikunj. I think when you look at the chemical companies,
My question, I
the
didn't ask you a question. I didn't ask you a
yeah,
question only.
so Nikunj, you took a long pause, so it was difficult for me to figure out.
I wanted to just say good morning and hear a good morning well back. We don't have to talk markets every time. You're getting too serious
Okay.
on the show, yaar. Naresh, smile karo, Naresh. Chalo, come on. Okay, let's start with chemicals now that you've started.
So, what's the question, Nikunj?
Okay, I want to start with something very basic. How should one understand the Fitch impact on Indian markets? Can we ignore it?
I think, Nikunj, the fact that we've done so well in the last, let's say from April onwards, we've done exceedingly well at the index level, broader markets. So, if you see some, let's say negative data points on the global markets or, some sort of a correction somewhere, I don't think we should really bother too much. I think if you look at the earnings season so far, it's been progressing reasonably well. Almost about 33 nifty companies have delivered numbers, and by and large at the aggregate level things are looking decent. Monsoon is progressing well, so not too worried about small things here and there. I think the broader trend for our market is quite positive.
Naresh, can you comment on what price action we've seen in some of the smaller power stocks? Because that's one space where, like Kunal was also, sharing that it's a space where when you see price action, it is a clear indication that the market has started adding fat, not muscle.
So the fact is, the problem is with power sector, people have not been as bullish. But if we realize this sector did not do well from 2007 to 2000, almost 21, 22. So the sector was in doldrums. Even today, on a non-adjusted basis, the largest company like NTPC has not crossed 2007 highs. The smaller names which have recently broken out, something like a NHPC, the stock was at 38 rupees when it got, say, IPO'd back in 2009. And today the stock is at 51 rupees, 52 rupees. So the returns have been terrible. In the near term, just because it's gone up 15-20%, it looks a little overdone. Same way, a Suzlon is still down a lot of it from the top. So the smaller names are just coming out of a multi-year period of no returns to terrible returns. If you look at it, Tata Power also, the other name which has gone sideways for the last year, year and a half. JSW Energy has corrected from the top, wherein if you could look at it, the stock was at 400 in 2021. Even today, it is at sub 300 levels. So they are still being sideways. So the smaller names, it's just that the pace has been large for SGV and NHPC. And these are stocks which generally did not used to move at a fast clip. So NTPC, for example, has gone from 197 to 225 in less than 4 sessions. This has not been the general tendency, but that is how trends start. Continue to remain bullish on the whole sector. NHPC still looks interesting. Tata Power has finally given a breakout on dips. That looks interesting. So, like the whole sector as such, the smaller names as well as the larger names.
Okay, fair enough. Meantime, Hemang, I don't know if you've gone to the theatres and seen Barbie, Oppenheimer, or even our very own Alia Bhatt and Ranveer Starro, but do you think that basically all of these movies will give that fresh lease of life to a lot of the, multiplex companies that have been struggling for a long time?
Well, I think Avan, though I haven't been able to catch up on any of these movies, I looked at the PVR numbers, and what's really coming out very clearly is that there is some degree of revival on a quarter-on-quarter basis, but still the overall numbers and the comfort is not that great. Hardly about 2-3% kind of an uptick on the ticketing side, and our sense is that the pipeline of the new content and the kind of things which have happened, in terms of the cost control and all, and the kind of cash burn that they have seen, that is quite huge. So I think, though you might get a little, positive on it because of the quarter-on-quarter performance or because some movies doing well, on an overall basis, I think this space will remain a little subdued.
Okay, the overall space might remain subdued, but we were just discussing the aviation sector also, Hemang, and this entire urban consumption, just a corollary of what you were talking about PVR Inox as well, and the entire hospitality industry, hotels, etc. Do you still see an upside, or do you think the best is already priced in?
Comes to Anisha, the hospitality, things are looking much better. I think though the last year per se was exceptionally good, I think the traction in terms of the occupancy, in terms of the pricing continues to remain very strong. Some of the companies have also carried out expansion and that have a lot of positive rub-off across. So I think Indian hotels still has a 15-20% kind of an upside. Lemon Tree looks even more promising at 95, 96, exceptionally a good performance. I think the numbers would be out maybe in a day or so, looking exceptionally good. So I think surely we have a positive view across this space.
Well, what a fabulous year it's been, or patch it's been for anything which has got to do with consumption. Hemang Jani, is there merit in thinking that IndiGo is no longer a pure aviation play which is exposed to the volatility of crude? Now IndiGo is more like a consumer bet for next 2 or 3 years, because India is growing, airports are getting connected, and air travel has moved from luxury to necessity.
So within a sector which is so marred by controversies and issues surrounding companies going down under, IndiGo definitely stands out when you look at their overall performance and the way that they have really gained the market share, particularly after we had this issue of Go Air and some issues with SpiceJet. I think surely it adds to the overall positioning of IndiGo. I think Nikunj, from an overall perspective, definitely IndiGo would be one stock where you would not have that comfort related issues. But what typically happens is that when the crude prices really shot up, let's say you touch around 100 or maybe a little more than that, that is when some of these companies, including IndiGo, go through a little bit of a rough patch. So I think barring that risk overall, as a pure play, in this aviation and the high quality management, even the kind of selling which was there by one of the promoters, I think more or less that is getting absorbed in the market. So there is a lot of comfort with IndiGo at this point of time.
Naresh, ONGC is something which we've discussed. Now that crude prices are decisively going higher, is there a trend in ONGC, GAIL, maybe Oil India?
So I've recommended ONGC a few days back, continue to remain extremely bullish on the stock. What is interesting for the stock is the stock has done nothing for the last almost from 2006 till date. So 2006, the stock used to be 140, 160. Even if we go back just a year back or 2 years back, you'll see the stock was at 150, 180 only. Now it is coming to on a dividend adjusted basis, it is crossing 2019 to 2022 highs. So it's a 5-year breakout, a shorter term breakout also done. And if you look at the stock is again something which is breaking out on 2 years, 3 years, 10 years. And overall, if you look at globally also, oil companies have done well. We do not have a direct correlation. A lot of oil companies in the US have done well. ONGC has given a breakout. Also, the fact is the stock has a relatively lower float also. It's something where now an interesting data point was ETFs owned 3.25% of the company and roughly 3% is the public float available. So the trend, if it starts, it could surprise on the upside just the way we've seen it in NTPC and Power Grid. So ONGC seems to be at a similar place where NTPC was, say, almost 6 to 12 months back. So out here, bullish on the stock. 170 to 180 is a good zone to buy. A stop loss would be 165. On the upside, say I would be looking at 220 to 250 over the next 6 to 12 months.
Kunal, autos have been in this dream patch. Based on the numbers, I think the upside fundamentally is looking difficult for me. But on the charts, are these stocks getting slightly lazy and slightly tardy?
Well, not all auto stocks are actually into a dream patch, Nikunj. Very few of them. So Tata Motors, of course, has done reasonably well.
Tata Motors,
Escorts has done exceptionally well. Maruti has actually underperformed. Hero MotoCorp has not come back towards the life highs. Bajaj Auto had its fair share of coming back to the life highs, but then the stock has struggled, since then. Eicher Motors has had its fair share of rally and then a major correction. I think more than a 10 to 15% correction for Eicher Motors. Ashok Leyland is at 180, 82, I think, since the last 1.5 odd year. So they're very meager performances for most of the auto stocks. Only few of them have actually done very well. M&M, of course, is one of the standout performers since the previous year when the stock was at 750 odd levels to now 1500 plus mark where the stock was trading. So I think there are very few stocks which have actually done well. Now the catch is that whether these underperformers, the likes of Maruti, Hero MotoCorp to a large extent, Ashok Leyland, etc., whether these stocks make a comeback in the second round when the auto stocks get up for yet another upside, I think that's the more meatier part to look out for, because you can't be dependent on these erstwhile performers to keep on performing and then lead the charge, because at some point of time when fatigue comes into these stocks, they're bound to be a phase where the underperformers have to kick in. But if that also doesn't happen, that's where the auto stocks would start to correct.
I want to look at two stocks, Hemang Jani. And you want to guess this one, Hemang Jani, in 10 years, what's the return in Escorts? We talk about Bajaj Finance, we talk about Eicher, but do you want to guess, Hemang? In 10 years, Escorts, what could have been the return?
It should be more than 20%, Nikunj.
10 years? No,
particularly,
no,
I
I'm
think,
talking about 10 years. I mean, you're talking about CAGR return.
yeah, I'm talking about CAGR. 10 years absolute return, it would be maybe a 15x stock.
Look at that data. And in last 10 years, Escorts, oh my God, that OMG moment, I think, for me. A 80 rupee stock 10 years ago has gone to 2500. Now, we don't stop here. Let's look at the 10-year return in Raymond's. So that's Escorts for you. And we talk about a lot of, HDFC Bank and Sundaram Finance being a multi-bagger. This company went public, I think, in 1994. Naresh and we were discussing yesterday. From 1994 to 2010, it did precious little. But between 2010 and 2023, last 10 years, actually, it has really been one of the most fantastic turnaround stories. Again, I mean, hats off to the great Rakesh Junwala. He was a big investor in Escorts just before the turn started. Raymond's last 10-year returns, again, exceptionally strong. It was between 180 to about 200 for almost 7 years. But in last 3 years, it has just done what could be called as a pole vault. And it has gone from 180 to 1880. Hemang Jani, now we are discussing stocks which have gone higher. If you have to take a bet on what could be the next big one or what are the next big ones, nobody knows what future installs. Randomness is always at play. But let's assign probability and possibility. Two stocks.
Nikunj, are you asking me from this two names that you have discussed?
No,
which
that's
one?
history. I'm saying that's history. What we're discussing is history. Future may not be, future will be different.
Correct.
So, Raymond is an unusual name. The company always existed, but it has turned out to be a great multi-bagger. Escorts, the brand was very well known, but last 10 years has been a great multi-bagger. So it's not that these businesses have got incubated in last 10 years. These are, Raymond's, I think, will be celebrating the 75th year of existence. And that could be the story for Escorts also, more than 35 years old. Which are the two companies which perhaps are existing companies, we know about them, but have potential to really pole vault in the next 5-6 years?
So, Nikunj, I think IT has been out of flavor for a while, and some of these tech platforms which got listed 2 years back. We had Euphoria. They also went through their own sort of pain, but now things are looking much better. So I think Zomato could be one name where one can really take a maybe 2-year, 3-year kind of a view, because after all of that issues and performance related stuff and the acquisitions, I think things have settled down and we're hearing positive data points. Management has become far more cognizant of what the market really wants, and I think the numbers can really come through in a big way. So I think Zomato could, and the technology could be one pocket where, because of the way things have panned out, there can be great opportunity and good amount of value there. So I think definitely one should look at that.
All right, Hemang, good to have you on board. Thanks so much for taking time out and joining in.